Google daily chart. We had a markdown in Google several days in a row on this daily chart. Then we had a markup, and we're right back up here where the original markdown one happened, back over here on our MMT platform. We've had other once this longer term markdown got put in, we've had a complete markup with the last earnings gap. That's what these gaps are, earnings gaps. And we came down here and put this bottom in, where we came down from where that original earnings gap of that great news was, and we got right over in here where we started calling that low, and we started buying up a huge amount of call options at 550s, 560s, 570s, 575s, and 80s when we were at that low, and we have popped 1 day, 2 day, 3 day, 4 day. There's the 5th day. Look at how many gaps were included from the markdown here. Each delta line for Monday, today is Saturday, 12/3/2011, 9:53 a.m. Pacific Standard Time, is $8.50. And I stand be corrected, MMTs. You can recalculate it, the system, to make sure. Now, having said all of that, we were marked down with Europe, and when Europe came out and Ben Bernanke and the Federal Reserve got involved, we had a markup day here on day one from this markdown, and we got in down here ahead of this area because it was a major support level and it warranted a position. 1 day, 2 day, 3 day, 4 day, we're at 5 days, right back up here at the original markdown. This original markdown was back on 7/26 of 2011. And we have covered a complete series, and this is our stock market funding, SMF MMT Trader. This is their market maker platform. I'm going to show a standard public chart, but MMT, once again, on the daily diamond, you closed up at the high and you closed above that daily diamond. And this daily diamond here is ascending in your platform, and it's going to challenge these daily diamonds over here where we said the major wall of resistance is in your MMT platform on this ripping trade that we have covered ever since Google had its weekly buy signal. And we go back many weeks during that time frame. And we've been on this, and it was the safest time to be involved with the markets. On a weekly standard chart, one of the things that I'm going to show you is that there is a target that the public is going to be looking at on a standard regular old charting system. That's all they're going to look at. But look at the weekly breakout. What the European news is, we came right up and we made the high of 624 and we came down. But you can see that I drew an ascending line right through here, which was where we marked it down 2 weeks in a row to the key weekly moving averages with a rising weekly that went through that 100 week, the 20 week it crossed above it, crossed above the 50 week. We pointed this out to you when that 10 week right here at this very time, which was on 10/30, by the way, is that we were slightly crossing above the 100 week. And we have day by day analysis on put side here. We had to go with that side. There was a markdown, but the value got right here. And I'm going to show you right here, right now, on a weekly standard chart of what the public is going to look at and where that value was. We're going to call it right here on that trend line. There we go. We have it, which was that major support area, which took this side down, and there was that major reversal. We're right back here in the overall broader trend cycle with a very strong move on the weekly chart. Short term, we're getting up into an overbought area in the shorter term. The monthly chart behind here is the most crucial part of the chart, because we can go back over here and draw this trend line back in 08. We were way up here at 747. There's this monthly downside bar at 695 on this monthly chart. That's going to ultimately, for Google, when Google can get a break, it's working on a monthly resistance breakout at this level right here. This is the big top. This was a great month. that we were involved with straight up, came straight back down, created buying opportunities here. Okay, and for 3 lateral months, we've come back up to what we call a major yearly, monthly triple top right here. And I'm just going to show the trend lines, MMTs, of how they go over here, of where you also are at the lower trend line. This is where that calendar year high or reversal was. That's your high for '08, but this is where it went straight down. This trend line right here, we're above it on a monthly closing level. That's this resistance 1 in the shorter term, and that was taking out this top right across here on the monthly level. We tested that 10-month moving average and just broke out. That's where that creating that buying opportunity was. Now, having said the triple top monthly reversal, you can see that the net change in the 12/2 expiration, you can see that how high that 560 call went. And this was just on Friday. But you can see that we clearly covered how the calls were marked down, how the call side of the market was marked down when we were in the last correction with that broader 2-week area that I showed you on the weekly chart in a video now. These were the greatest gains, that after the calls were marked down to such a deflated price that the 12/2 expiration on the call side went up and the put side got marked down as well, because it did. All right? And you can see how the calls got marked up that we have in this particular incident. You can see that the 580 calls got marked back up, and this is just on Friday. But from the mark down to the mark up is that by understanding where, and here we even bought and sold this one, a 620 call for 1217. 1217 starts here and goes down to here. Okay, so we can see that on the call side, we can see how the puts came way down, but we could see that the call side was marked up from being marked down. And the reason why is that the monthly chart is that we're at triple tops and we're going to buy dips, and we're going to look at the put side. If we don't take out the resistance, we have no choice. But we're at a major yearly triple calendar year top. That's very exciting, because if we break through this area right here, this calendar top, we're above this trend line. That's good, but now we're at that resistance level. We're going to be on standby with MMTs. The other thing that I want to point out is that it's still early on, because you can clearly see here that you're at 71.22 on a monthly percent DS. That's it's getting up there, and it's at a fairly decent high level where you can get short-term pullbacks at major calendar year tops. Any pullback, we will be buyers and taking advantage. I will draw a trend line for the MMT right here on the monthly level, and that's this right here. That's going to be 601.38. So 624, hey, it's got a high beta, but that's going to be that major support level on any drawdowns. The little key area is going to be, like we said, right around this top over here, these little monthly tops and this monthly sell-off. That's going to be, we got to break above 627.75. Google closed at 620, made a high of 624 on 4 million shares. There was a late seller in the day taking profits minus 80 million money flow as of Friday's closing bell on 10 or 12/2/2012. And we could have short-term profit taking. We'll do a put side analysis. If we can't clear through it, then the upside is limited, where it may has to pull back and then break higher, or break up and then make a reversal. But we're at a major price action hurdle. And you go back to the 2010 reversal right here, and this big fat monthly down sell signal where you got support there. We definitely cleared that a long time ago in that monthly bar. The other monthly tops in the shorter term are right here at that 568 area, where that's where the move started its monthly reversal off of the 561. It's when you got in this area and you broke to the highs of this current resistance level, and it's going to be right across here. So monitoring short-term 5-day trends relative to call and put options, we will be covering how the put side was marked down. Here's some of the puts. The 630 put was marked down 44%. Some of the in the money puts that we look at, we were looking at the ratio knockdown here, so that we'll find in the shorter 5-day trading zone where we would be looking at the put side that's been marked down, and where the short-term inflated marked up calls have to pull back, and how the adjustment here. So we've been watching some of these major put options that were deep in the money already, and this is just Friday's data, but they're marked down considerably. This was a 1217.580 put at the time, was inflated. It was marked down again 35.48%. The last print was $2. They're definitely cheap. So what? It's how they were marked down. Remember that when the calls were marked down the same way, they're the ones that have been marked up the most this last 5-day trading zone. And once again, this goes under the category of a December rally in Google, but from the original inception, we have all the live analysis, whether it was done on weekends and during a live day. It's all here. We are short term on the call side. We're going to have to go through all of our call side. We're going to go through our put side. And we're going to figure out what our forward-looking trade management will be on Monday. Special presentation, Google. Short term, the calls have been marked up. Look at this one. That 550 was marked up 305% just on Friday. Look at that. Okay? So it was deep in the money, but it paid. And it was only in the money. Google hit the low price down there of 563 in the money. It paid for the 12/2 expiration yesterday. That was just the movement. The last print was $64 a contract. And if you don't believe me, I will show you in this monthly chart exactly where those contracts could have been bought. They could have been bought over here during our cycle, which was right here. The low of these contracts could have been purchased at $16. And naturally, the highs up here are, they close at 64.86, and that was the high. And that was that markup. And there was a time to buy that expiration that just passed us by. It was a weekly 11.2, but you can see that buying down here wholesale when they were marked down, you had a lot of risk. And buddy, they made a big move. They're inflated. This contract's already expired on yesterday on 12.2, but you can clearly see it there. All right. And once again, we'll go back and recap the final episode of this yearly trend throughout the remaining days of January, and what it means to get right down in here and understand a monthly Google chart along with the weekly that we showed you. Calls and puts, short term, based on 5-day entry and exits.